Building wealth through real estate investing has always been regarded as a dependable method. The prospect of purchasing properties with minimal down payments, watching their value increase, and enjoying passive rental income as you explore the world can be enticing. However, it's crucial to understand the complexities of real estate investing. It's not always as rosy as it seems. I'm Gavin, and I educate individuals on money, personal finance, and investing. If you're keen on enhancing your financial future, subscribe to our channel and like this video if it aids you. Considering the down payment, real estate requires substantial capital beyond the listed property price. For a residential property purchase, especially with favorable mortgage conditions, a down payment of around 20% of the property's value is typical. In thriving real estate markets, this sum can be daunting. While 20% is a standard, there are alternative financing methods, but they might come with added risks or costs. But the down payment is just the beginning. Real estate investors also commit to continuous financial obligations like closing costs, which consist of title search, appraisal, and legal service fees. Funds for repairs and property maintenance are essential, as is money to sustain the property until it's rented out. Miscalculating these costs can lead to significant losses. Once invested in a property, accessing your money isn't straightforward. Real estate is a long-term commitment. If you need funds urgently, real estate might not be the best source. Selling a property can be a lengthy process, even in a bustling market. From listing to finding a buyer, negotiating, inspections, and finalizing the deal, there's a myriad of steps involved, with potential hitches along the way. On the topic of property management, it's more than just collecting rent. Being a landlord comes with challenges, from handling tenant issues like late rent or maintenance requests to more serious matters like evictions. Ensuring your property is well maintained, especially when unexpected repairs crop up, can be both expensive and time-consuming. For those with properties in different locations, management becomes even more taxing. Dealing with problematic tenants can be emotionally and financially draining. Engaging in legal disputes concerning lease infringements or property damages can drain both time and resources. Although there are systems and strategies to manage these issues, the truth remains that many landlords may not effectively implement them. This often leads to exhaustion and, in the end, compromised profitability. Regarding the market's nature, while real estate is generally considered less unstable than the stock market, its value does fluctuate. Prices usually rise steadily, influenced by aspects like location, the economic environment, and the balance of supply and demand. However, it's essential to note that real estate's appreciation over the years doesn't safeguard it against downturns. Property price shifts tend to be region-specific. Hence, while some areas might experience a dip, others could see growth. During economic slumps or housing market crashes, property values might drop, leaving investors with assets valued below their initial outlays. Such market dynamics can disrupt financial strategies, affecting down payments and credit scores. On the topic of leverage, it refers to the practice of using borrowed capital to fund real estate investments. This can potentially increase returns when property prices rise. Such leveraging is often highlighted as a primary reason to delve into real estate. It allows investors to control vast real estate amounts with minimal down payments. However, it's a double-edged sword. Leverage can also intensify losses if there's a market decline. For instance, a substantial decrease in property value can erode a significant portion of an investor's down payment, if the income from rentals isn't sufficient to cover mortgage and other costs. Investors might find themselves in a tricky financial situation. Over-leveraging could also restrict financial adaptability, making it tough to capitalize on other investment opportunities or adapt to unforeseen monetary challenges. Now on to zoning laws. Investing in real estate isn't merely about acquiring the right property and reaping the benefits. It involves navigating a maze of rules and regulations that can be overwhelming. These laws, which vary widely across locations, govern what can be done with properties. For instance, transforming a residential home into a commercial space might attract penalties. Numerous regulations dictate how landlords can interact with their tenants, from rent hikes to eviction processes and maintenance timelines. Ignorance of these laws can result in substantial legal expenses, eroding profit margins. In certain areas, the real estate market might face saturation due to increased demand or speculative ventures, causing property prices to spike to unsustainable peaks. This creates a bubble, often driven by the influx of investors lured by the lucrative returns. Acquiring properties during these times might result in overpayments, hampering the potential for satisfactory returns. Intense competition can also escalate prices and diminish the likelihood of securing lucrative deals. In conclusion, while real estate investment harbors significant drawbacks, it can be a lucrative endeavor when approached judiciously. It's vital to venture into it with a clear understanding of the associated risks and potential challenges. Aspiring investors should do thorough research, consult with seasoned investors, and critically assess their financial standing and risk appetite before diving in.